Welcome back to the podcast. Ernest Wong joining me again. Good to see you. Thank you for taking time out of your busy day to talk stocks. I think that's all we do anyways, is talk stocks.
Yeah.
That's your busy day. Yeah. So I thought our last episode was pretty fascinating. Our review of the Brookfield Investor Day. And, Brookfield is such a wonderful business, Ernest. There's so many things in the fire. You wanted to quickly talk about how they're trying to pitch the government of Canada to launch a fund or to try to get some Canadian pensions as investors. Your quick 2 cents on what Brookfield's trying to achieve there.
So what you're referring to is that former Bank of Canada Governor Stephen Poloz had made a plea to Canadian pensions. Mm-hmm. So entities like Ontario Teachers Pension Plan, Canada Pension Plan, like Ontario Municipal Workers Pension. He wanted them to invest more in Canada.
Yeah.
Because generally one of the portfolios of the Canadian pensions are, if you read their annual reports, they're extremely diversified. They have large international investments everywhere.
The world's a big place, and Canada's what, 3% of the world's GDP? Although we have some great businesses here, we just don't have all the diverse industries and the infrastructure to invest in.
Mm-hmm. And so when Brookfield heard this, as any good money manager would do, they quickly put together a plan where they would raise $50 billion from these pensions and put it into a fund managed by Brookfield, where Brookfield would be earning management fees on, and focused on the Canadian sector. That's exactly what you would want a money manager to do, is that they see opportunities to raise money and they go out and execute on it.
And to build a product around a theme.
Yes.
Especially a theme that, could be very rewarding, right? And so kind of like a little bit of a sovereign wealth fund, so to speak.
Yes.
That Canada is, and I think these are things that should be done. And the Canadian pension funds should be investing more into Canada, and could be a great thing. And Brookfield certainly has a good track record. I see some snarky remarks, of course, because Mark Carney, who used to be I guess he was a Bank of Canada minister many, many years ago, now works for Brookfield. He got a government appointment with Justin Trudeau, trying to boost the Canadian economy. All good things, but some people kind of are rolling their eyes about the timing of his appointment in Brookfield, trying to get assets from Canadian pensions.
Well, that's why Brookfield hired him.
Exactly. Yeah.
It's because they want to be able to have these opportunities to manage money.
That's right.
And
so we're saying
this is not a done deal. Mm-hmm. I think the pensions have understandably been reluctant to commit money to this product because number one, they don't want to be confined to Canada. I think one of the things that they've said is that one of the reasons Canadian pensions are successful is that they have no specific mandates from the government.
Yeah.
Like they're free to invest however they want. And then secondly, I think a lot of these pensions have in-house private equity arms. So there's not necessarily a need to go out and partner with someone like Brookfield, but good effort anyways.
Sure. Sounds good. So let's quickly touch on Adobe. Have we done a full podcast on Adobe? I can't recall. We've talked about it. Adobe's been an investment in our portfolio for a few years. Arguably a terrific business, Ernest. Adobe.
It is.
Yeah. Not arguably, objectively, it's a terrific business. For those that don't know Adobe, it sells subscription plans for those in creative.
Photoshop and Illustrator and those kinds of things.
I should know. My wife is in that business. That's her field, and we get a bill every month on the credit card for Adobe. I think we pay $90 a month now to use it. But my wife couldn't use any other product. It's not like she could all of a sudden be trained on something else. It's something that she learned many, many years ago outside university, and has been using Adobe and Illustrator and Photoshop and all other products in Adobe, and something that is indispensable to her business. And I noticed that we're now paying $90 a month 4 or 5 years ago, we were paying $80 a month. So every year they raise prices a little bit, and it's a good business. Our experience with the stock has been pretty good. It's maybe been a little more volatile than we would have expected it to be. And of course, Ernest, when we bought the stock, we weren't aware of how the potential of AI and how that was going to impact Adobe's business, specifically generative AI, where you type a text or say something and it produces video, music, pictures out of the blue. That was something none of us could have predicted a number of years ago, but this is where we are today. So Adobe reported its results. Very strong. Adobe has tendencies to report strong results and beat expectations, but Ernest, the stock fell because of guidance did not meet expectations. That's neither here nor there, but yeah, your quick update on what's going on with Adobe and your take on the company and its prospects going forward.
So Adobe has, the market is unsure of whether AI is going to be a positive or negative for Adobe.
Okay.
So on the negative side, I think there's worries that because you can immediately type in a prompt and generate an image and do a lot of things, like you can even generate video now.
Yeah.
That there's just simply not as much need for Adobe's tools anymore.
To actually create the images.
Exactly. Because before you might need 10 photo editors, now you can use one.
Okay.
So that's been the worry for Adobe. The flip side is that historically, Adobe advances in technology have only increased generation of content, which needs to be edited on platforms like Adobe.
That's right. So going back 10 years ago, social media, no one could have imagined the boom of TikTok and Instagram Reels and all this content that needs to be created and edited properly. And as a result, it's been a tremendous boom for Adobe's business. All advertising has switched now from pretty much print and TV to social media, to online. And as a result of AI, many are so excited because they'll be able to target ads even better as AI will learn. So it could be huge for Adobe, although there are those risks as you mentioned, as those prompts, as those Gen AI get even better and smarter and faster, is it a risk? The final thing I'll say, not to get off tangent, of course, it's AI, which means it aggregates what the world already knows. You still need people to come up with these ideas and create new ideas. And so there'll always be a place for Adobe in this world.
So one other thing I would say about the earnings reaction to the stock is that I think it's generally not a good idea to read too much into individual stock movements after earnings results.
For sure.
And the reason for that is because you really don't know who is selling and for what reason. So for a company like Adobe that they like to provide a lot of guidance and direction about what their earnings are going to be in the next quarter. And there are highly sophisticated traders out there, firms like Citadel or Point72, like I'm just
Jane Street,
Jane
whatever.
Street Capital.
Yeah.
These firms develop computer models that try to predict earnings. And if results come even slightly below, then their algorithm is designed to sell the stock. It has nothing, they're not trying to forecast whether Adobe is a great business and is going to continue to deploy capital intelligently into the future. They're just trying to play this earnings game. And so just because Adobe's guidance was slightly worse than expectations doesn't necessarily mean that things are doing too poorly.
And I think that's a great point. And I think it's very easy. You and I talked about this, for your brain to start going down a bad rabbit hole as a result of seeing a stock price decline, right? And decline precipitously. Oh no, maybe they are no longer the AI winner. They're going to be an AI loser. And the only thing that's telling you that is because the stock was 580 last week and now it's 510. And so your brain starts to create these scenarios. What do other people know that I don't know? And because the stock going down, because that was a great quarter objectively, and the guidance miss was only slight. So someone must know something. There's always, of course, there's people smarter than you out there, and so you go down that rabbit hole of, I got the narrative wrong, things are changing. Maybe I should wait till the coast is more clear. And generally speaking, you're probably going to make that decision at the absolute wrong time.
I think that's well said.
Yeah.
And I think that's especially true for companies like Adobe, because there is such a debate going on around, things about the impact of AI on their business. So I think what we're doing here is that we're looking at the business fundamentals. We see that revenues, subscribers, and profits are still going up, and they're executing very well on their plan. Like they have a new product release related to AI almost every week.
Yeah.
And I think that they're going to be very successful at it.
As my dad always says, you have no idea what these companies are working on, right? And you have no idea what they're reinvesting those cash flows. You think you know, or you certainly know what's going on with the stock price. Everybody knows that, but you don't know what products and service they're going to come out with next that will maybe reignite growth. It's clear, Ernest, that Adobe is a mature-ish company, and it's one that used to grow probably at 20 top line at 20% a year. That's now come down to low double digits. Still nothing to get upset about. Everybody would love to have a mature business growing at 10% a year. They got a new CFO who is focusing now on hopefully smart capital allocation. I see they've made a material drop in their share count, but as a result of share buybacks, the company's generating an ample amount of free cash flow, and Adobe is still very, very bullish on their long-term growth, on their addressable market. They feel that there are many areas they can get into. There's some new products that they've launched that admittedly have not gained the traction that they thought that it would be, to break into. I think they have a product to try to compete against Microsoft, right? So
yeah, so they've been working on a product called Adobe Express, which is essentially a template-driven creative product. So not for high-end designers, but for people like me and you that maybe want to create a poster or a brochure. This is a very competitive field, and there's a lot of players out there to varying degrees of success. Adobe has been investing a lot in this. They've been a little bit coy about the details of how it's going, and so we'll see what happens. But I think one other thing I would say about Adobe is that they are primarily an enterprise software business. A lot of people typically associate Adobe as me downloading Photoshop on my computer and like editing my own photos.
Yeah.
But a large bulk of their business actually comes from selling to large enterprises. So this would be selling to marketing departments, selling to selling
every Fortune
Acrobat
500. Yeah. Sorry.
And so the reason that this matters is that one of the very smart things that Adobe has done with regards to AI is that they are very careful about not violating copyrights. And so this is very important if you're creating an ad, right? If you're Disney and you're creating an ad for the next like Inside Out 2 or whatever, you can't use other companies' products without their permission in your ad. And so if you're using AI to be generating these marketing materials, you want to be sure that the AI is doing it in a copyright safe manner. And that's what Adobe's doing. And a key part of their value proposition that they're selling to enterprises. And it's been gaining a lot of traction.
Yeah. Any other points you want to add about Adobe?
Nope, I think we covered it.
Yeah. So
maybe we'll do a deep dive on it one day.
Yeah, maybe we'll do a deeper dive on Adobe's strategy. We're trying to keep this at a little more higher level for now. I think the valuation is quite reasonable, of course, and we're excited about the long-term growth prospects for the company. Beautiful balance sheet. The type of business we really love. tremendous gross margins. What do they make? 90, 80, almost 90% gross margins?
Yes. So it's a subscription business, which means that they don't have to go out and earn the revenues again next year because the subscribers are already there. Pricing generally goes up every year, and they're executing very well.
So our feature discussion today is going to be on one of the best brands the world has ever seen, and that's Ferrari. It's a company that, Ernest, you told me to buy when it was split off from Fiat. And I told you that we don't need another car company in our portfolio. At the time, we had owned General Motors. I don't know why we owned General Motors. I guess it had a nice dividend. But I thought, why would I need another car company? I didn't realize that Ferrari's not a car company. It's a luxury brand's goods and deserves to be valued like an Hermes or those type of businesses. It's top notch, and I didn't realize, because I don't own a Ferrari, how much people that own Ferraris, how much they love them, how much they love to customize them, how they want to keep buying more of them, how they can't wait to get them and immediately sell them. Quick Ferrari story before I'll let you start talking. I know someone who, with a buddy, was lucky enough to buy a high-end Ferrari. I can't remember which model. They would take delivery. They live in Toronto. They're going to take delivery in Florida. They'll get the car for about a week. They're going to try it out themselves, and they already have a buyer for the car. So they're going to make some money on Ferrari. So that's, it's not only just something that people love to keep and love to own. There's also money-making opportunities by owning a Ferrari. So let's get into the stock. I should have bought many, many years ago, but lucky we did buy it, Ferrari.
We bought Ferrari in 2018. And the background for Ferrari is that it used to be part of Fiat Chrysler, which today is called Stellantis. And there was an activist in Fiat who said, you have this great company, Ferrari, inside your portfolio that the market is not giving any value to. So why don't you give it to shareholders and create some value that way? And so that's what Fiat did. They spun out Ferrari into a standalone company in 2016. I looked at it in 2016 and didn't buy it, unfortunately. But then we didn't make the same mistake twice, and we bought it in 2018. And it's done I think it's been one of our best performers.
It's done quite well over the last 4 or 5 years, for sure.
And as you pointed out, the core thing to understand about Ferrari is that they're not a car maker, although they make cars. If you look at what Ferrari is like, who is buying them, the habits of which, like the behaviors of which their customers are viewing these products, it really doesn't resemble a car maker. You can't buy a Ferrari. You can't walk into a Ferrari dealership and buy a Ferrari today. You have to prove to the dealer that you qualify, are actually interested in the brand, and then put yourself on a waiting list for 2 to 3 years before you're able to buy a Ferrari. I don't think there's any other car company in the world that's like this.
Probably not.
And
there are other high-end luxury cars, right? McLarens, Lamborghinis, you name them, but this is the next level.
Yeah. And the reason that this matters is because it shows up in the financials. Their margins are over 40%, which is much more like Google and Microsoft than they are to even good car makers like Porsche, for example.
Yeah. Well, the typical car makers, we'll call them the GMs, the Fords, their margins are around 10 to 15% at best. Right? Tesla's margins used to be higher. Now they're trending more towards the 10 or 15%. And very, very few car makers have margins of 40% on the cars they make. It's unbelievable.
And unlike regular cars, like their prices go up every year. Used prices, I think prices for used Ferraris go up as well.
Yeah. The price of a Ferrari has gone up 85% since 2012. Faster than inflation. it's just a terrific inflation protected type asset. And of course, that doesn't include all the customizations that people spend on the Ferraris that they buy.
Yep. So altogether, it's a terrific business that people are willing to pay almost any money to get. And that allows for Ferrari to continue to raise prices and make more cars into the future. So that's basically what Ferrari is.
So Ferrari produces how many cars today?
They produce about 14,000.
And when we bought the stock, they produced about
9,000.
So they've slowly but surely increased the amount of cars, but still that's ridiculously low. I think that in North America there are 16 to 17 million new cars sold a year in a very hot year. Maybe standard 14 to 15 million new cars. So Ferrari's producing 14,000 cars globally.
Their philosophy is to produce one less car than the market demands. So I think one of the things about Ferrari is that their current capacity is only 15,000. They're only able to make 15,000 cars. And the analysts have for a long time been trying to ask Ferrari, when are you going to increase this? How much can you ultimately make into the future? And they haven't really wanted to answer. I think that the way I think about it is that as the world gets richer, as there becomes more multimillionaires at, I don't know, 1%, 2%, 3% per year, that's probably what Ferrari can increase their production by. The other thing that I think is really interesting about Ferrari is that because it's a luxury goods company and not a car maker, every new product that they launch, whether it be in SUVs or whether it be electrics or anything like that, they are incremental sales to their existing portfolio.
Okay.
And so what that means is that, let's say you are Toyota. If you make you have, I don't know how many cars Toyota sells every year, but
probably millions.
Let's say they make a new SUV. The person who's going into a Toyota dealership is going to say, well, do I want to buy a sedan or do I want to buy an SUV or do I want to buy a Kia SUV instead? So it's not incremental to Toyota. They just need to have that SUV to attract new buyers,
Okay.
right? To maintain their current level of sales. Whereas for Ferrari, 74% of their cars, so like 74% of 14,000,
Yeah.
like 11,000 cars or so, are sold to existing Ferrari owners.
Those are the people that have the garages in their basement
Yes.
filled with cars,
Yes.
and they're collectors.
Yes.
And they buy them. Sometimes they sell them. They trade them. And then they're invited to a special. They're part of an elite club,
Yes.
right?
And so when Ferrari launched their SUV called the Puro Sangue, I hope I'm saying it correctly.
Yeah.
When they launched their SUV, they called up all of their best clients and they said, hey, we're making this new SUV. It's going to be like nothing you've ever seen before. And we want to invite you to buy it. We want to invite you to be on the waiting list to buy this car.
Yeah.
And if you don't put yourself on the waiting list, you're never going to get invited again. Right. So,
Wow.
and so of course, the waiting list for this thing sells out in like a month. And these Ferrari owners, like to them, spending another 400,000 euros, like whatever, if you have like 100 million euros net worth,
Yeah.
it's just another car to the garage.
But it's a piece of art. It could
Yes.
be an investment. You could be able to sell it for more
Yes.
than it's worth. Something that you can tangibly, physically enjoy in this day and age when everything is online and digital. Here's a real beautiful piece of art.
And so that's one of the things that Ferrari has been doing, is that while a lot of other like super high-end car makers have been, trying to reach down into the mass market by releasing cheaper cars.
Yes.
Like really, in my opinion, kind of diluting the brand a little bit. What Ferrari is doing is they're going to their customer base and they're launching they're launching product adjacencies. They're launching new products that segment of the market is going to want to buy. And it's been very successful.
So let's talk about Ferrari's EV strategy, right? So right now, Ferrari's making hybrids as well as regular combustible engine cars, which there's a huge demand for. We think even in the future, when most people may have plug-in cars, there'll still be tremendous demand for a vroom, vroom type car that a Ferrari sells. And even if people have to pay more for it because there could be regulations or restrictions, Ferrari says there'll be no trouble with demand. But the next leg of growth, of course, is EVs. And so what's Ferrari's plans? Will it be producing more cars over and above that 14,000 or 15,000 limit that it currently has? And what does that look like in the next 5 years?
So today, about half of their current production is hybrids. And these are true hybrids in the sense that you can toggle between electric and gasoline mode. And so the way that the CEO describes it, like I've never driven it,
No,
but
me
is
neither.
that if you're in the countryside and you want to, really go for it,
Yeah.
you can use the gas engine and get the sound. But if you're in the city and you want to, keep it a little quieter, you can use the electric mode. And as expected, the response has been very positive.
I bet.
So electric cars, pure electric cars, have been a bit of a debate for Ferrari among the investment community because there is a group of car enthusiasts who just view it as sacrilege that Ferrari would ever consider making an electric car.
Fair enough.
And I think that but the reality is that if you're a car maker today, which Ferrari's still making cars, even though they're a luxury goods company, you have to have a plan for electric vehicles, especially since Ferrari they operate in Europe where there is a mandate that you must have a certain portion of your fleet as electrics going forward.
Very interesting.
And so what Ferrari did is that they are going to announce their first electric car, fully electric, in 2025. They recently built a new plant to be able to work on building electric cars.
Is that a plant that is completely separate from where they're building the regular cars and the hybrid cars, or are they finishing those cars in this plant?
It's still in Maranello.
Okay.
It's still in the same place where they're making cars.
Got it.
It's incremental capacity.
Incremental. Okay.
And I think the exciting thing for Ferrari with regards to electrics is that, again, unlike traditional automakers like Toyota, electric cars are going to be incremental production. If Toyota makes an electric RAV4, that's one less gasoline RAV4 that they're going to sell.
Correct.
Whereas for Ferrari, what they're thinking about electrics as is it's a totally different segment of the market. If you had the old V12 Ferraris, you're going to keep the V12 Ferrari because of what it does for you. And then you're going to buy the electric one because it does something else that doesn't exist in the market and provides a driving experience that you're never going to get with any other car.
It could also be a way, Ernest, for Ferrari to break more into the Asian market, right?
Yes. And that's an excellent point because one of the other things is that there's a very large segment of the market, like for very rich people who, don't necessarily care about the Ferrari legacy of the roaring engines, right? Mm-hmm. And where a very high-end electric vehicle resonates with them as well. So it certainly could unlock another portion of the customer base as well. So there was a rumor on Reuters that the new electric car is going to be 500,000 euros base price. It's not confirmed because the car's not been released yet. But 500,000 euros is a substantial price increase on what they're currently selling at.
Yeah.
So there is a price opportunity for Ferrari to use electrics to raise pricing as well.
Didn't I read somewhere, maybe I'm completely making this up, where the CEO test drove one and said, people are going to love this. Like, it's insane. Is that right?
Could be.
Yeah, I think I read. Yeah, anyway. So we'll look forward to more announcements in 2025 on the EV release. In the meantime, Ernest, is Ferrari? Could you imagine 10 years from now it producing 20,000 cars a year? Like the price, we assume that the price will go up every year. We assume that people will, as they add more customizations, people will spend more money on that. Maybe they'll have, instead of having two Ferraris, they'll have a third Ferrari. Maybe they'll also want an EV. But at some point, what's the production limit? Are they never going to produce more than 15,000 cars, or does it? The strategy is slowly but surely add more lines and more products over time.
Well, again, their strategy is to produce one less
Yeah.
car than the market demands.
Yeah.
And so as the number of rich people grows, I expect that they're going to continue to increase production correspondingly. One thing I will say, though, is that they have been raising production fairly aggressively over the last, since 2016, since the spinoff. They increased production from, I think it was 6,000 or 7,000 at that point. Today is 14,000. So
Excuse me.
it was 8,000 in 2016. It's 14,000 today.
Yeah.
So they've increased it at a fairly steady clip. They've already very clearly said that going forward, they're going to prioritize price growth rather than volume. So what that means is they're going to raise prices more rather than they focus on.
If there's a
increasing
2-year
volumes.
waiting list, that must mean that the demand is there at at the price, and maybe they're selling them too cheaply.
Yes.
Which is, it sounds silly when what does an average Ferrari cost? 380,000 euros right now.
Yeah. So currently the average amount that they're making per car is about 375,000 euros, of which 20% is personalization. So think of things like like different colors and like special seats or whatever.
Whatever. These are rich people problems.
Yes.
So
$300,000 for the car, roughly.
anything else you want to touch on before we talk about valuation and fundamentals?
No, I think you can really clearly see that they are putting a bigger focus on price going forward. So they just announced two new cars, which was the 12-cylinder. They announced two versions, the Coupe and the Spider. And
12-cylinder engine? Is that what you said?
Yeah, it's 12. Yeah,
Okay.
that's why it's called 12.
Okay.
That's
a lot of cylinders. Okay.
The pricing for the 12-cylinder is 30% more than the predecessor, which was the 812 Superfast. They were sold out basically immediately.
Yeah.
And a lot of people wanted to buy both of them. So I think that's that's an illustration of what the demand for the brand is today.
Does Ferrari risk losing customers if the waiting list gets too long or they keep selling out products? People say, oh, I need this car already. I'm just going to go buy a Lamborghini or something like that.
Yeah, I mean, I think these people, Ferrari's typical buyer has no shortage of money, so they can always just keep themselves on the list.
And Ferrari has other parts of its business as well. I'm sure they're less important, but of course it's involved in the F1. So it's a part owner of the F1. And also Ferrari lends out its name, right, to clothing, other luxury goods. You can get Ferrari sunglasses. And I think there's also 2 Ferrari theme parks, right? So it might make a little bit of royalties on that. There's one in Dubai or one.
Yep.
Yeah. Okay.
Those are relatively immaterial relative to the whole business. And Ferrari views them more as a way to amplify the brand as opposed to actually making money of them. And I think that's an important thing to note as well, is that Ferrari doesn't advertise at all.
Yeah.
Like you're never going to see a Ferrari ad on a Super Bowl or on TV or a billboard because they don't need to. It's Ferrari.
There's Ferrari stores in airports. There's a Ferrari flagship store in Milan that I've been to. I would feel silly walking around in a Ferrari hat, but I clearly people are buying it. So you're saying it just sees it as an adjacent type part of their business, not something that they're going to focus their energies on and building a luxury clothing line that's trying to compete with Fendi or what have you. Or
So historically, Ferrari has been fairly loose with their licensing of their brand. You could buy Ferrari stuff everywhere,
Yeah.
licensed products everywhere.
Yeah.
In more recent years, they've taken a greater focus on this, really partnering only with the vendors that reflect the brand, the quality of the brand. I think they might have signed a deal with Gucci for handbags,
Yeah.
stuff like that, right?
Got
They
it.
only want to, going forward, they only want to really work with the high-end luxury goods companies so that it reflects what Ferrari is.
So we bought the stock, Ernest, I guess around $100 US, maybe a little bit less. You mentioned in 2018. At that time, of course, Ferrari was selling fewer cars. The growth in earnings per share has been tremendous as a result of A, volume, B, pricing. And those two things have come together to really been a terrific performer. But now, when you look at Ferrari's stock price and its valuation, it's expensive, objectively expensive, right? I think the stock is trading at one of the highest multiples of any of its group. That said, a lot of stocks are trading at those levels too. I mean, the market is more expensive than it has been in a while, and that makes sense because the market's at all-time highs. Stocks don't trade cheaply when the economy and earnings are growing and things are going quite well. So talk to us about your comfort level with where the stock is trading, and is it appropriately priced for the growth that is going to come in the future?
I think it is very reasonable, given what Ferrari is. What's interesting about Ferrari is that a large portion of their cost structure is fixed, like the manufacturing facilities and those kinds of things. And so every additional car that they sell is going to be at higher prices.
Yeah.
And the margins on those cars is extremely high.
Yeah.
They're earning, in some cases, they're earning 80-90% incremental margins for the supercars that they make.
Amazing.
In some cases. So the reason that matters is because even with a very modest increase in volume, the profits grow very rapidly. Over the last 4 years, for example, Ferrari's earnings has doubled.
Yeah.
They've doubled over the last 4 years.
And that's what we want. We're looking to own companies that can grow their earnings at double-digit rates.
Yep.
Ferrari has just been growing faster than we expected, and the stock has done better than we expected as a result of the earnings growth.
And I think there's no shortage to demand for Ferraris, nor is there any reason to think that they're not going to be raising prices going forward. And that's in addition to their opportunities in electric cars.
And talk to us about capital allocation. What is Ferrari obviously is making a lot of money. It does pay a nominal dividend, but it's grown that dividend quite quickly. I see that it is aggressive on share buybacks. I don't think there's a lot of reinvestment opportunities per se in the business. It's not going to open up a new plant every 5 years, right? It's a thoughtful approach. So your take on its allocation of the free cash flow.
So Ferrari's capital allocation is fairly plain vanilla. They pay a small dividend. They mostly buy back stock, and they maintain a very clean balance sheet. So one small note for Canadian shareholders of Ferrari, whether it be the Italian or the New York ticker, is that the dividends are taxed at an extremely punitive rate for Canadian shareholders because there is no. Is it because there's no tax treaty?
Correct. There's no tax treaty
between Canada and Italy.
Correct.
And I think every dollar of dividend we get is withheld at like 50% or some ridiculous amount.
It's not great. The only positive we can say is the stock price has done amazing, and the dividend yield is so low anyways that we're not owning it for the dividend.
Yes. The other thing to understand about Ferrari's capital allocation is that Ferrari today is still majority owned and controlled by Exor, which is the Agnelli family. And so they have their own motivations in terms of how they want the stake of Ferrari to grow.
Yeah.
And it's one of the reasons why they do what they do.
Have you seen the Ferrari movie starring Adam Driver? Did you see that
I
one?
have not.
I gave up after 5 minutes. I could not. I did not find Adam Driver believable as Enzo Ferrari, but my dad told me it was a fantastic movie. If people want to read more or learn more about Ferrari, is there any books? Is there anything that helped you when you were doing your research about it, or just it was the pure following the annual reports and the spin-off doc?
Essentially.
Yeah.
I don't. I can't think of anything.
Yeah. Yeah, I mean, one of the interesting things we love to do is to read books as well about the companies that we own. On the Couche-Tard, for example, Daring to Succeed is a recommended book. I wish there would be one about Brookfield, an updated one about Brookfield, and more details about Bruce Flatt. Before we go, Ernest, a quick touch on the news today of Bell Canada selling its interest in MLSE to Rogers. You read the book about Rogers.
Yes.
And you mentioned that this was Edward Rogers' dream, the current chairman, to own a significant stake in sports interest. Any thoughts on the MLSE? And I mean, the valuation quite stunning, but what's your take there?
So, as you noted, Bell is selling its 37.5% stake in Maple Leaf Sports and Entertainment to Rogers.
And that owns the Maple Leafs, Toronto Maple Leafs,
It's the Leafs, the Raptors, and Toronto FC, essentially.
Those are three pretty good franchises.
Yep.
I would say so. Mm-hmm.
Rogers already owns the Blue Jays,
yeah,
which is not part of MLSE.
Yeah.
And Bell, from Bell's perspective, they wanted to basically reduce debt. They've raised a lot of debt over the years.
They've got a big dividend to cover,
and this was a valuable asset that is worth more than the cash flow that it is generating to the business. And so I think they wanted an opportunity to get out, and they found a partner in Rogers.
Yeah. Is it true that a lot of sports franchises do not generate a lot of free cash flow? It's just the nature of that business, although arguably, if you had bought a franchise many years ago, you wouldn't care about the cash flow because they're worth a lot more.
You don't know how many write-ups I've read where the thesis was a sports team, and there's a couple publicly traded ones out there, like the Knicks, and I think
Atlanta Braves,
Manchester United, where the entire thesis was based on the Forbes sports team valuation, and how the market cap of the stock was less than what Forbes was.
Yeah, or just wait, some other rich moron will buy that team because they've got billions and billions of dollars and nothing to do with it.
Yes, and generally, sports teams are not great investments from a cash flow perspective.
You have to pay the players. And I mean, have you seen? I know we're getting way off tangent here, but have you seen how much these contracts are for the elite players? And, in NBA and baseball and football, only a few teams get all the best media rights and TV rights. And so it's very hard to compete.
But with that being said, if you are a billionaire, there's a certain status that you get when you're the owner of a sports team you're not going to get anywhere else.
Yeah.
And if you're Mark Cuban or if you're Steve Ballmer, being able to be at the sideline and interacting with the players, you'll pay a lot for that.
I think so.
And I think that's one of the reasons why sports team valuations are what they are. And beyond that is that if you have a quality asset, and there's only 30 of them in the NBA and 30 of them in the NHL, and I don't know how many in the NFL.
Yeah.
They're going to go up over time.
Yeah, the scarcity value.
The scarcity value of these things makes them go up over time.
And of course, live programming, that's the only thing now people are watching is either news or sports, right?
For cable.
For cable, right? So it's the value of those assets should only go higher. So that's all we got for you this week. Thank you very much for joining us. We appreciate if you leave us comments or reviews on social media, as well as on Spotify and Apple and YouTube. We appreciate all your support, and we'll see you back here real soon. Thank you very much.